Welcome back to This is VANCOLOUR. My name is Mo Amir. Now, are you anxious about your job, your mortgage, simply paying the bills? Canadians are experiencing 40-year high inflation, interest rates rising at a pace not seen since the 1980s, total consumer debt is rising, and one of BC's key economic sectors, housing, seems to be in trouble. Home sales activity is at multi-decade lows in Greater Vancouver, with the steepest average home price correction since 2008. As the president of the Jim Pattison Group overseeing many different business lines, our guest tonight will give us his forecast and analysis. Of course, he is former BC Premier Glen Clark. Glen, thanks for sticking around.
Thanks, Mo.
Now we get into the hard stuff.
I guess.
You oversee so many different business lines. Obviously, you're always looking at the economy from a macro lens. When we look at what's happening right now, as I mentioned off the top, are we headed for trouble? What's going on? What's your forecast?
Well, it's a very unusual time. I mean, that's not everybody knows that, but it's really hard to figure out because a lot of the problems are COVID-related problems. The supply chain problems are COVID-related. And they've backed up into, and by the way, people retiring and leaving early and the lack of workforce.
Mm-hmm.
But such an unusual time. So it's a bit hard to predict. And I think if you ask me, are we going to have a recession? In other words, defined as 2 consecutive quarters of negative growth, the answer is yes. We're probably in one now. But I don't think things are that dire because a lot of the problems will work their way out of the system. The supply chain's already starting to ease up. Inflation is moderating, coming down. I think the biggest challenge is if the central bank overcorrects because we had this inflation, they've raised interest rates. That will definitely hurt British Columbia more than anywhere else, I think, because we're so reliant on the real estate. And if they keep doing that, if they keep going high and overcorrect, then we could have a much bigger problem. If they slow down and things moderate the way I think they will, and if supply chain gets better, the chips get better, you can buy cars, all those things get better, inflation will moderate on its own. And I think we'll be back to pretty strong economy in British Columbia. We have a number of very positive things in British Columbia, which are really helping the province. LNG, whether you like it or not, huge investment, massive capital investment in British Columbia. Site C Dam, massive capital investment. Subway down Broadway, massive investment. New bridges, the new Patella Bridge, and all those projects. I mean, there is a lot going on here. So the province has been the strongest economy in Canada for quite a number of years now, and I think it probably will be going forward. But we're in for a rocky time, and there is definitely lots of challenges out there. So I have to temper my enthusiasm with a little bit of moderation. There's definitely some challenges.
Now, you hear this term being tossed around, stagflation, which is basically where you have high inflation, but then also, as you just said, a recessionary economic environment, particularly high unemployment. And I feel like the other shoe that needs to drop is high unemployment, if that is to happen. Do you think the possibility of stagflation is very real? And if it happens, are we looking at a lost decade?
No, I mean, I think those things are really, there's a real possibility, but I think unlikely. And again, it's because normally inflation, there's high wages chasing, goods and prices are rising fast. And that's a sort of normal inflationary environment, which is demand driven. This one is supply driven inflation based on the fact that you can't get product in from China, that you can't get truck drivers, that you can't get chips, because COVID shut down those plants.
Right.
We sell, for example, Peterbilt trucks, and we have lots of demand for the trucks. We can't get the trucks from the factory in Texas. Same with cars. Try buying a car today. It's very hard to get product because all those factories took time off during COVID. And as they started up again, they ran out of supply from China for certain products. So all those things are sticking and a drag on the economy and driving prices up. But those will fix themselves. And they have nothing to do with really the normal inflation that we normally see. Now, the bank is worried that unions and others will demand high increases because of this inflation, and that will then lead to a self-fulfilling kind of prophecy of a cycle of inflation. That's what they're very worried about, and they're probably right to be worried about that, which is why they're raising interest rates. But as long as they don't keep raising them so they crush the economy, and these things work their way out, the supply chain system works their way through the system, then I think we should be fine.
Let's talk about housing.
Sure.
So important to BC's economy,
It is.
particularly Vancouver's economy or Greater
Yeah.
Vancouver's economy. And the numbers are not looking particularly great. I mean, housing sales have basically slowed. I think they're only bolstered by low inventory in the market.
Right.
If you have an open variable mortgage, you're seeing your rates go up. If you have to renew your mortgage, you know, you might be in for a surprise of what your mortgage payments might look like. Are we headed towards the fabled housing crash in BC that we've been talking about for years?
I don't know about crash, but definitely some decline. There's no doubt. You know, I was reading recently that over 50% of the mortgages in Canada are variable rate mortgages. In the United States, most mortgages are fixed term for 30 years. So high interest rates in the United States doesn't have the same immediate impact that it does in Canada. So Canada is much more vulnerable to the high interest rate environment. And there's no doubt Vancouver, not British Columbia, I'd say the Lower Mainland in particular, is much more vulnerable. You can look at this two ways. I'd say it's unhealthy, the rate at which we depend on real estate for our economic growth in British Columbia. I think there's too much reliance on building condos and immigration to fuel our economy and not enough on business, if I could put it that way, and entrepreneurial business. So slowing that part of the economy down will be painful, but I think actually long-term is helpful to us. I mean, it's very hard to attract workers to the high-tech business when you can't rent or you can't buy a house. So I think that we will take a step back. It will hurt in the Lower Mainland. We're lucky that British Columbia has so many other benefits going for it, so we should be, I think, okay. But I think it's probably good if we get a bit of a correction on the housing system. It's easy for me to say, I'm not a developer, but I do think I think that some softening of that unrelenting price increases will be very good for us.
So I'm either a dummy or unlucky because I bought at the peak of the market. I bought in March.
Right.
How much do you think I will experience in terms of a price correction on my property?
I just can't predict, honestly. I don't want
You can't give me a forecast?
I'm not going to give you a forecast on housing, but I do think we do. You know, there's something they call the wealth effect, economists, right? And you're probably feeling that. If your price of your house goes down $100,000, you think, oh, do I buy new furniture? Do I buy a new rug for the? Maybe I'll take a break because even though long term you're going to be fine in housing in British Columbia, in the short run it might psychologically can have an impact. And I think I worry a little bit about that more than anything else. If you're a young person, you stretched hard just to get into the market last year. Now you're underwater on your mortgage or something.
Right.
What does that do to you in terms of your spending and your overall outlook on life and on the economy? So I think there are challenges for sure, but not challenges for people like me, who bought a long time ago and live in Vancouver, or for most people, but certainly for younger people who just got in, there's going to be some rocky time.
And it sounds like you're saying not enough of a challenge to make it a crash, like a correction, but not a crash.
Well, again, if the Bank of Canada keeps cranking up interest rates, there will be a crash if they keep doing it. So the question is, have they done it? Are they going to keep at this kind of pace that we've seen, which is really unprecedented? And I'm hopefully not.
Yeah. Really quick, Glenn, let's say I have some extra cash around. I don't because of interest rates now. Where am I putting my money? Where should I be investing? What should I be looking at?
That's a good question. The market's has come down quite a bit, the stock market, but there's a big debate as to whether it's got a little ways to go yet. And so I'm not sure. I'm not going to give advice on television.
I guess I'm putting it in GICs and furniture now. So. All right. Thanks so much. I got a couple more questions before we're done for the night.
Sure.
Folks, stick around because after a quick commercial break, former BC Premier and the current president of the Jim Pattison Group, Glen Clark, will reflect upon his time in public office. That's up next. I'm Mo Amir, and this is VANCOLOUR.